Hey everyone, and welcome back to the channel. Today, we're diving deep into a topic that affects every single one of us in India: the Goods and Services Tax, or GST. Remember that midnight session back on July 1st, 2017? The grand vision of one nation, one tax, to simplify our notoriously complicated tax system. Well, it's been 8 years, and India has just unveiled what many are calling GST 2.0. And trust me, you're going to want to hear about this. When GST first rolled out, the idea was noble. Simplify, stop fraud, promote ease of doing business. But with those confusing 5%, 12%, 18%, 28% slabs, plus a cess on top, it felt like we just swapped one complicated system for another. Small and medium businesses, in particular, really struggled with the compliance and mountains of paperwork. But fast forward to today, the government has heard the feedback, and after 8 years, they've introduced significant reforms. The biggest change: those 4 initial slabs, 5%, 12%, 18%, and 28%, have been streamlined into a much simpler 2-tier structure. Just 5% and 18%. This is a huge shift, and it's going to impact a lot of things. So what gets cheaper? Get ready for some good news. Many packaged and branded foods you regularly buy, like fruit juices, butter, cheese, pasta, nuts, dates, soya milk, coconut water, sausages, and condensed milk. All these have seen their GST reduced from 12% down to 5%. That's a noticeable saving on your grocery bill. But it gets even better. Essential medical items like bandages, diagnostic kits, and medical-grade oxygen tanks have also dropped from 12% to 5% GST. This is a welcome relief for many households. And hold on, because some items now have 0 GST. Yes, you heard that right. The government won't take any tax on items like paneer, pizza, bread, and ultra-high temperature milk. Education also gets a boost. Maps, globes, charts, erasers, and notebooks, which were previously at 12% GST, are now completely tax-free. That's a great step for students and parents. Perhaps the biggest relief comes in the health and insurance sector. This is massive. If you, an individual, are taking out life insurance or health insurance, it's now 0% GST. India has historically low insurance penetration, so this move by the government is a huge incentive to get insured, especially for those critical illnesses. And for those battling serious illnesses, there's even more relief. Life-saving medicines for cancer and other rare diseases have also been moved to 0% GST. This could genuinely make a difference in people's lives. Let's talk about your daily routine. Household items like toothpaste, soaps, chocolate, and coffee, which used to be taxed at 12% to 18%, are now mostly down to 5% GST. So your morning routine just got a little cheaper. A very sensible move has also been made for handicrafts and agricultural-related goods, like composting machinery and tractors. They've been moved from 12% to the 5% slab. Great for our farmers and artisans. And if you're thinking about buying a vehicle, listen up. Small cars below 4 meters, buses and trucks below 1,200 cc, ambulances, motorbikes less than 350 cc, and 3-wheelers have all seen their GST reduced from 28% to 18%. That's a significant cut. Even your electronics are getting a break. Air conditioners and televisions, previously in the 28% slab, have now been brought down to 18%. Now you might be thinking, wow, all these reductions must cost the government a fortune. And yes, initial estimates suggest a revenue loss of about 50,000 crores. However, government officials have a different perspective. They calculate that when rates are reduced this much, people will buy more, consumption will increase, which has been slow for years. Production will increase, people will have more disposable income, and ultimately, the government will either make the same amount or even more money. If this theory holds true, everyone wins. Experts believe this rationalization could trigger an additional 2 lakh crore of consumption, which would be fantastic for our economy. But wait, there's always a flip side, right? While GST has been reduced on most items, the government has also created a new revenue stream with a special 40% tax bracket. So, technically, GST hasn't gone from 4 slabs to 2, but rather from 4 to 3. This new 40% category mostly targets sin goods and some luxury items. The government says this new slab was created to replace the old compensation cess that was levied on top of the standard 28% GST for these items. So, what's on this list? Tobacco products and added sugar products like carbonated and caffeine beverages. And of course, luxury vehicles, yachts, and personal use aircraft also fall under this hefty 40% category. But here's an important addition to this list that will affect many. Online money games, casinos, horse racing, and even IPL tickets. Yes, if you go to watch an IPL match in the stadium, get ready for a 40% GST on your ticket. And for those mid-size and large passenger cars, over 4 meters or 1,200 cc, that used to have 28% GST plus a 22% cess, totaling 50% tax, the cess was supposed to be removed. But the government has kept an overall 40% slab for them. Similarly, bikes with an engine capacity of 350 cc or more will also face a 40% GST. The unfortunate result of this could be that if anyone attempts to manufacture high-quality, high-end cars or products in our country, it might become a loss-making venture. This could potentially lead to more manufacturing of cheaper vehicles. So, there you have it, a GST 2.0 in a nutshell. A massive rationalization that makes many everyday essentials cheaper, reduces the tax burden on health and education, and gives a push to certain industries. But it also introduces a significant new tax bracket for what the government deems sin goods and luxury items. What are your thoughts on these changes? Do you think this will boost consumption and the economy? Or are you worried about the impact on premium products? Let me know in the comments below. Don't forget to like this video, subscribe for more breakdowns, and hit that notification bell so you don't miss our next update.